All right, we are live Friday evening on the Independent Investor Channel. Take a couple moments, let this hit everybody's feed, give everybody a chance to make their way in here. Want to welcome everybody who's made their way in. Special shout out to the folks that have taken me up for the pre-party party. I feel like I've been at it actually for a while with some of the behind the scenes conversations that I've had. I do want to give a quick shout out, absolutely, to Annalicia as well, up in New Jersey. So I'm going to make you famous. I wish I had 500,000 subscribers because the shout out would be that much bigger. It really would. But I have 25,000. We just passed the 25,000 mark. There's been a few that have acknowledged that. That's great. I look at it as one of those milestones, the same way I look at investing milestones. Could have never really have been able to anticipate where this journey could have gone. Helping some younger aspiring YouTube channels just today kind of feel out what this YouTube gig looks like a couple years down the line, what you can expect out of it, what should be your approach going into it. And I've had a few folks that provided me some insights when I very first started. I had a few people take me under their wing. Absolutely, Ryan Scribner right at the top. You know, everybody knows that follow my channel. We met in person and really hit it off, and let it be known he called me the real deal. I am, because although the 25,000 is a great mark, it's a nice round number, I guess. My focus is the ripples that we're making behind the scenes. There's no doubt about it. Some of the relationships that we're solidifying, some of the portfolios that we've been able to embolden, we've been able to make them make a little bit more sense for the individuals that actually hold those portfolios. So maybe introduce a little bit more awareness to their own money. You guys can seek out the irony in that if you'd like. But man, too many projects to name, certainly. Definitely too many individuals to name. But I just want to thank everybody who's ever been involved with the Independent Investor Channel. I've been engaging in one of those in the trenches projects with the Facebook group. And I've got hours on this project going in there and organizing some of the thread posts from the years past. And it's amazing to me, man. There's people there that have been part of the group and that are no longer with us. And I guess that's the eye-opening thing about social media, is that maybe you touch people, maybe they come to the message and they get what they need and they no longer have any type of use for the message. And that's fine. I've said that right from the beginning. My message is very, very crystal clear. I leave no stone unturned. I give away all the goods to people because there's too many people out there that need the goods. There is. And I'm ever evolving in my needing the goods. I just experienced one of those events today. I was able to share that with my VIP group on WhatsApp. That small group is absolutely fantastic. It is dialed in the way that I want it because it's on point. It's not a gossip channel. There's no doubt about it. There's some serious philosophies and there's some serious knowledge and there's some serious evolution going on in that group. I'm not exempt from that. No doubt about it. I'm just as interested in what a Matt Money has to say, dropping in that thread as I am a Miss Thompson as well, who's one of my absolutely favorite people that I've had to meet outside the channel. Just favorite freaking people. And one of my good friends just reminded me this evening that the world is full of great people. Great people. The cool thing about this opportunity is that we get to come together for 60 minutes a week. I provide that opportunity. I'm glad to do it. I've done it here now for a long time. I've provided a lot of live minutes, that no doubt, on this opportunity. And I think if nothing else, to empower one investor at a time, are we meeting that goal? Yes, we are. The people that we have reached would absolutely attest to that. And they would agree with me on that. So goal number one met. Providing awareness to the power of self-directed investing. Very, very scary proposition for a lot of people. I think a lot of people are figuring out that if they knew nothing about this gig prior to being introduced to my channel, or maybe some of these other fine content creators in the group, that they're finding out that you can win a heck of a lot more at the stock market that you can in a lot of different things. Okay. So we'll continue to beat that drum on the self-directed opportunity through wealth preservation, the lowering of fees, and the seeking out those opportunities that provide that access to the stock market at the lowest possible cost to the investor. So look at me as your ambassador, or really, I am your ambassador for self-directed investing and eliminating the middleman. I've said that many, many times. And I think for a lot of people who have experienced some of those pockets of expense, whether it be through your 401k, whether it be through some of your specific organizations, employer organizations that sponsor the 401s, the 403s, right? Some of your teachers' unions as well. Guys, I'm pulling from my archives here on some of those investors that have been empowered by the message. There's no doubt about it. And we've been able to kind of break through, and using the power of social media, we've been able to break through and really understand that the need is out there. The need is out there. And we'll continue to provide that opportunity as fast or as slow as this opportunity is going to grow in reference to the subscriber count. No problem. I have no problem with that. What I'm more interested in is solidifying relationships, and for the short or the long duration that you are involved in the independent investor channel community specifically, we want to welcome you with open arms, and we want to make sure that it's as positive of an experience as you can possibly get out of it. Because here's the thing, what I don't want to see happen is you come to my channel and you're like, wow, this guy's incredible. I want to invest like this guy. If that's the message you get from me, you really need to check your compass, and you need to listen to what I'm going to tell you right now. All right. Everybody's awareness to the stock market, wealth building, their own personal budget and discipline can be improved upon. Okay. Improving upon your budget does not mean tuning into 10 YouTube channels collectively and getting a consensus and then going and dumping what you learned onto the stock market. Makes no sense whatsoever to me. What you really need to do is look for a way to look yourself in the mirror and make this gig yours. Okay. What I would like you to do is come to the channel, sit across from me, and understand that I am just a regular fella. All right. I do not have all the answers, nor do I profess to have all the answers. I have a very, very sharp discipline that's evolved over time, and I share that discipline openly with the community. There's a lot of folks in the community that had no discipline when they came on, and they've accelerated that discipline tenfold. To those people, wonderful. I think the basic ingredient to this investing gig, quite honestly, is a desire to do so. That's really it. I've said many, many times, your investing success will have very little to do with the perfect portfolio. It will have everything to do with your desire to want to make it happen. And that's to speak as plainly as I possibly can on, in reflection, all the mistakes that I've made in the market, wanting to provide this information, perhaps maybe to someone a little bit younger in their life. Annalicia was one of those. She popped on right before the live stream. And in all seriousness, we need to get this information in the hands of our youth, all of our youth. Inner city, yep. Suburbia, rural, US, yes. We need to provide further opportunity for our international patrons of the Independent Investor Channel. You guys need to understand, and I'm going to provide a very special shout out to my international subscribers. A lot of these folks subscribe to my message because they can relate to me, because I'm working class and I don't come from money. And I do know and appreciate the value of a dollar. And a lot of countries actually appreciate the value of dollar a lot more than the United States. And I openly say that. I'm openly critical of the US and how crazy we are with money. But we need to reach everybody. We really do. So a special shout out to my international patrons, absolutely. To my sponsored channels as well. Marie just popped in with Minds in Motion as well. So special shout out to Marie. I've had the distinct pleasure of watching channels start from scratch and evolve over time. And it's really interesting because there's no audience that I can grow to reach the masses myself. It's going to have to come through a network of community members that are also doing their part in sharing the fact that investing has become a little bit more personal to them. It's become a little bit more of an acknowledged importance. Okay. And without channels like Minds in Motion, who I've just thrown on the screen, it wouldn't be possible. Rebecca, with Rebecca Waters' Quest to Fire, who represents a community of working class folks just trying to get ahead, probably fits into that category that I was speaking about at the top of the live stream, most specifically about good people. And I would go out of my way to meet these good people and not focus so much on a subscriber number. I've said this many times. When you start a YouTube channel, everybody starts for their own motivations. I definitely had mine when I've started, and a lot of those have not went away. I'm more passionate about YouTube now. If 25,000 subscribers has taught me anything, it's that you can do this. I had my doubts, and people who are closest to me, who have been with me behind the scenes as well, know how sometimes very difficult this journey can be, and how challenging it can be, and how difficult it can be to find a balance between providing a social media opportunity that's relevant, that's concise, that doesn't waste people's time, and that can evolve and stand the test of time going forward, right? That's the key, is that we don't get stale on the product going forward. If you think you want to start a YouTube channel, I encourage you to do so. But I will tell you right now, it's not the easy gravy train. Start a YouTube channel and in 2 or 3 weeks, you fall into your Testarossa. It doesn't work that way. I probably just dated myself as well. But it's been a challenge. No doubt about it. And I've never felt so motivated as I do now. I've got the products really fine-tuned. I've got the 2 websites kind of dialed in the way that I want them. The independentinvestorchannel.com is really just a drop point for those channel creators that want to find equipment for a YouTube channel. They can kick in there. I've basically consolidated all of the resources that I provide on the Independent Investor channel through the website as well. So if you kick on there, you'll see those under the Investing Tools tab. Some of the tutorials and redirection to the blog posts that I've been making, as well as to the Independent Investor podcast. So many properties to take advantage of and learn from. I think the number one springboard that I will just mention quickly is the Facebook group. And I do want to thank my administrators. I've added a bunch more to the team as well. They're helping me moderate the group, and for that, I really appreciate it. A couple in particular, Ray and Ernest and Jared, have been with me for a long time. Adolfo as well. Those guys own that Facebook group. There's no doubt about it. And what I can do in my little part to organize, make it a lot more of a pleasant experience for the people. I've got Jerry as well, who's one of my new admins as well. I'm going to be changing up the face of that group a little bit, rolling out some of those initial curriculum pieces. So people who actually want to learn about investing, or they actually want to learn about maybe cleaning up their budget a little bit, or learning a little bit more about what goes into spending discipline, they can find that stuff on the Facebook group, and I'll build it up to a product to where I'm happy with, and then I'll make it part of the exclusive club, because I would rather have quality over quantity any day. And what I'm finding out is that for those people that really want to learn about investing, they really want to learn about investing and personal improvement overall. I think those two go hand in hand. I think a lot of people will come onto social media with a lot of different motivations, troll, I don't know, spit fire at people. I've got all kinds of people who come on and they don't like my message. And that's totally fine too. What I've learned in 3.5 years or 3 years of doing this is you got to have thick skin. So I've changed my approach a little bit, and I have done a pretty good job of just focusing in on my message and how it affects the group. And you guys just being that. I've got Noella, who's popped in here as well. Dave with Hidden Freedom Investing, who's another one of my featured channels. So you guys know who you are. Matt Money has been very influential on me as well. And so special shout out to Matt as well, who kind of plays into some of the discussion. If I do have time to get into it tonight, I will. It plays the discussion of a new investor looking to tackle this investing game. And I think sometimes we fall short as a YouTube community in breaking down barriers to investing as opposed to putting up barriers. What I mean by that is, my philosophy is better than yours. Hey, you need to do this. Hey, you have too many stocks. Hey, you have too little stocks. You're not diversified. I'm diversified. You're this, you're that, and you're this, and you're that. You're a genius. No, you're not a genius. And I think some of that discussion really can be confusing to a new investor who's just looking to align a program that can make sense for them, period. And so I think I will continue to drive home the point of fundamental investing, drive home the point of getting your fitness right before entering into the market. Very, very important. And I'm super, super excited to be rolling out my VIP club as well. It's going really, really well. It's a lot of fun. I dropped my heartfelt comment in there because I almost kind of reached a breaking point today. When I talk about investing and investing for the long term, I have multiple facets of a portfolio that I've built up from what started with 2 accounts at $1,500. Both of those accounts have went over the $100,000 mark, and it's interesting because I see everything that we've gone through this year, and I'm looking at the portfolio, and I'm just like, man, if it weren't for a couple SPACs in there, or one SPAC in particular, I'd just be kind of trudging along. And I kind of had to catch myself on my own discipline because I did kind of get caught up a little bit. And it was like, man alive, what am I doing? And it really does speak to the topic at hand this evening about ETF investing, passive investing, and who that's for. And who the single stock investing, the active investor, is for. And I'm not gonna frame this discussion around which one is better, because I'll just give you guys the answer. I'm at about a 50-50 split on my application. I believe there's benefits and there's drawbacks to both. Okay, but whatever discipline you choose for yourself, okay, we just need to make sure that we're aligning what it is that makes sense for you guys. With those opportunities out there that do in fact exist. All right. Just saw my boy Jason just pop in to hear the thread as well. Someone said SPAC. So I guess I've been called some interesting nicknames, but I think Jay probably takes the cake for 2020. Unless you guys have a better one. I think the SPAC man is pretty awesome. But all kidding aside, special shout out to Jason as well. He's one of my featured channels as well. A little bit different of a relationship with Jay than I had with Ryan, because when we started YouTube, there wasn't a whole heck of a lot of investing channels out there now. Now there's got to be hundreds. But I've had the privilege of watching Jay start from the beginning. I was going back in that Facebook group and I found a portfolio review with less than 20,000 this time. So I keep going back and back and back. And it just goes to prove that everybody starts from somewhere. And I'm not going to disclose what Jason told me the very, very first time that I met him. But it was a pretty awesome personal admittance to me as to if I can do it, anybody can do it. And I think anybody can resonate with that message, man. If you can't come onto my channel and feel motivated or feel like this opportunity is open to you, tune into somebody like Jason or Marie or Rebecca or any one of these other content creators, man. We'll provide that motivation, because I do contend investing is for everybody. But Jay's doing a good job. Certainly the elephant in the room is the SPAC. I think we've got something somewhat planned. Jason's quasi-committed, I think, to looking at the merger as well on October 2nd. So that'll be a live stream that we look to kind of publicize a little bit prior to. That'll be a lot of fun. You guys know I like to keep my conversation a little bit more general, but it'll be a SPAC party, hopefully, if Jason wants to bring some of his audience over, because they're wild, man. It's awesome. It's a lot of fun. But we're gonna discuss that particular trade in general. I'm a little bit hesitant on rolling out. I'm up fairly significantly in the position, but I'm very hesitant about putting that out through social media, because I don't want people to get the wrong impression. Because I think SPACs, as exciting as they are, I think they do run a very, very good chance of disappointing a lot of investors. And I've learned a ton through this process. I just bought my first warrants yesterday. Look at Hyliion warrants right here. They're trading at about a 30% discount. So if you guys want to have a little piece of my insight, I did buy the warrants just yesterday. I thought they were way too low, and they'll start to come in line with the actual share price of the actual outstanding stock, as well as the merger date does approach. But we'll talk more about that during that opportunity when Jay makes his way onto the Independent Investor channel. He's graciously agreed to that, and just always been a staunch supporter of the channel and us of him as well. So thank you so much. I really appreciate that, guys. So I'm going to cruise up to the top here and see if I can't address some of these questions. Matt says, that must have been because I was talking about him. But it's really cool, man. Matt takes his time out of his day when he's down working to provide those insights inside the WhatsApp group, and just one of those many insights, most of the time on a daily basis, that we're dropping inside that VIP group for the group's benefit. So I know I'm benefiting of it. I'm humbled. I'm the one that runs that particular group, but it's pretty good stuff, man. We got Adrian Sicardo, man, the Harley guy as well. He's also an administrator in my Facebook group. It's cool, man. 25. I never would have thought that was possible, because I think when I say that the first $10,000 in investing is the hardest milestone that you'll ever reach, I think YouTube, it's kind of like the first 100 is the toughest milestone you'll ever reach. I don't know if some of you guys would agree with that, but I remember waking up and having like 52 subscribers on a Saturday morning, and then one would unsubscribe on a Sunday and it'd go back to 51. And then I'd gain like 2 or 3 more on a Monday, and then it would go back to like 50 even. And I'd be like, wow, now it kind of snowballs out of control a little bit. People are organically coming, and they provide you props. They don't even know you. If you've got, a little bit more of a sizable audience, it does gain you some credence, I think, with the YouTube community. And just to give you some insight to the analytics, I have been working on both of the websites very specifically. And that's because a lot of the traffic that's driven through the Independent Investor channel has been driven just recently here within the last month at a clip of 600% coming from outside sources. And that is from the websites directly. So some pretty exciting stuff, man. I think I've been kind of patient on Kyle and the work that he's done for me behind the scenes, man. Special shot goes out to Kyle. He'll always have a fingerprint or a thumbprint on that project that he helped me with the Independent Investor Group. I'll probably be rolling out somewhat of a military special as we get into the holiday season. I want to invite some of my military shipmates as well that may be struggling a little bit with having an awareness ace up your sleeve. That's exactly what that is. And just for a few bits, quite frankly, a donation, to be honest with you, you can get in there and gain access with multiple big portfolio owners, some very, very interesting perspectives, that of which will accelerate your growth and awareness. And I know specifically how deficient military and government workers are in personal finance with the lack of opportunity. Make no mistake, guys, this opportunity absolutely blows the doors off of anything that's available. So please look for that. Those are the plans on the website, but certainly a special shout out to Kyle as well with his projects, but specifically his involvement in helping me, because he worked some magic. No pun intended. He worked some magic and sprinkled a little bit of fairy dust on the Google search console. And he's like a Google whisperer. You know what I'm saying? He can like whisper the code to it and it listens to him. It's really weird, man. The code like laughs me off. Like, it's like, nah, man, denied access, denied. Kyle goes in there and knows exactly what to say to it. So whatever he did is working. So it's nice to see that it's driving some of that traffic across our platforms. And if I do end up benefiting from that, you know, the community is going to benefit from that as well. So that's all I'll say about that. So that's what I got. Appreciate it. Kana, Robert Cardwell as well is in the group, has been with me a long time. I'm going to work down some of these comments. Jerry as well is kind of one of my pilots for the Facebook group. I'm going to provide some of these content creators with their own corner as well. That way it'll be a multifaceted group. That way, if there's certain topics that you gravitate to when you come into the Facebook group, you can just search out those topics right on the front. You're not going to have to go through what I'm doing right now, and that's searching through 3.5 miles of one topic. So I'm going through and I'm reviewing each and every topic that's ever been put into the Facebook group. It's a long and arduous process, but you guys will appreciate the work there being done, because they're being thrown into categories of topics. That way, when new investors come in there, they can say, hey, I kind of like the FAQ type of thing. I like the question and answer type of thing. That's how I learn best. Like, what are other beginning investors asking? And you can review just that topic. What are some investing ideas? What are the brokerage topics? What are some investing books that I can read? And you can very easily seek out those topics and when you get into the Facebook group. So very, very cool stuff, man. All right. Cruising through here, guys. I'm going to try to cherry pick some of these questions, man. If you have anything specific for me, Ben made his way in here as well. Very cool. Just a lot of solidified relationships with a lot of very, very cool people over the last 3 years on the channel. So I do appreciate that. But before the half-hour mark, I do kind of want to jump into my topic and generate this discussion, because I threw out a question. I think I was doing Kyle and Matt's live stream last time. I said, hey, fellas, I've got 50 stocks. Is that too much? And it was kind of a tester, honestly. I was kind of fishing, but I wouldn't have 50 stocks if I didn't think it was appropriate for me. Is 50 stocks too much? Is 25 stocks too much? Is 12 stocks too little, right? Should we be buying into the Warren Buffett philosophy to put your best soldiers on the field and go to war with them? I think to each his own. I think, unfortunately, YouTube has bred an environment of so many people coming on and asking the same mundane question, and they come from a genuine place. They're just very, very ill-founded questions. Okay. What stock should I buy? I don't know. The answer I give now is I do not know. Why? Because I don't know a few things about you that you know. So me being a stock fella, am probably very, very well versed in pointing out some things that I use to seek out my exposure through products. Okay. But you know you better than me. What I mean by that is, you know what your age is, you know what your risk tolerance is to the market, or you have at least a general idea. And you maybe have put some level of thought into why the hell you're even investing in the first place. Okay. So you got to disclose that information, because if you're just looking to come onto YouTube and find the next best thing, I find that that is a rampant habit that we need to try to break across the social media community as a whole. But on an individual basis, we really need to make sure that we're seeking out those opportunities and being fair of the people that we're asking to provide those answers by being fair with the opportunity. But I think it speaks to a much larger issue of how we should seek out our exposure to the stock market. I was asked to give a little bit of a breakdown of the benefits of passive investing. And I will just say up front, I think passive investing applies to 100% of people. Passive investing, okay? Single stock or active investing doesn't necessarily have to apply to everybody. As a matter of fact, I think you should go through and look at it more of a tiered approach in that the passive investing route should probably be pursued first. And here's why. There are a lot of different schools of thought, and there's going to be people out there who are sitting back and they're like, Ryan, no, man, I disagree. I think you need to take a bunch of risk when you're young. You can afford to lose everything, blah, blah, blah. I have a counter to that, and it's going to be probably contrary to what a lot of people want to hear, because a lot of people want to come onto YouTube, and at 21 years old, they want to turn $200 or $300 or $400 or $500 of starting capital into multiple thousands of dollars, and they want to do it right away. If that is your goal with investing, you will probably fail. Okay. Some of you will succeed. Some of you will trip and fall into a JMac investing or even an independent investor video talking about an opportunity that we've done DD on, due diligence on, like Hyliion, for example, is a perfect example. You trip and fall into it, and you think that because you find some success by doing that, you want to duplicate that success. Okay, because why? Because we're creatures of habit, and we always want to do what it is that works. And once we validate a process, and I'm talking validation because it worked one time, okay, we want to try to replicate that process. Investing, unfortunately, does not work that way. And investing, when you don't think that it will humble you. And you will learn a lesson that most every single investor that's been in the market for a while has learned. Okay. And that is, you are playing with fire if you're engaging in a little bit more of a risky profile. You're trying to do something that has been proven futile for many, many decades. I'm not saying that if you have the time and you have the education and you've really done your research and you really feel like this is for you, that you are eligible to be an anomaly in the market and enter into a single stock approach to start and succeed at it. There's a few in this group that can do just that. All right. But I don't tailor my message to the anomalies. I don't. Okay. I'm not looking to be an advocate for the anomalies. I'm not looking for people to come to the independent investor channel and say, Jesus, this guy is a stock guru. Follow him at all cost. Just do what he does and you'll be fine. I don't agree in that line of thinking at all. I agree more so with having you evaluate your own ability, your own capability, your own financial capability, because that really does speak to how successful you can potentially be. Okay. If you've got a job that allows you the opportunity for some really nice surplus capital, and I'm talking surplus, guys, I'm talking like we really need to be marching toward that 10% of our income at a minimum. There's folks in this community that do well in advance of 10%. I'm one of them. I do about $1,900 a month. Okay. So it just speaks to how serious I am about making investing your gig. Okay. So really want to make sure that you have that discipline before entering into the market. And this community can really provide you that support and structure. Okay. But if you're looking for that next best thing, that stock, okay, and you're looking to forego what's required by entering into a single stock program in way of being an active investor and needing to do due diligence to even have a shot at making money, because I think there's somewhat of a misconception, and I was a little bit emotional when I dropped this in the WhatsApp group today, in that you can freaking research to something to all get out. Okay. You don't think I did due diligence on Citigroup? You don't think I did due diligence on JP Morgan? You don't think I had Altria Group pegged at the bottom, only to see it down here 8.5%? It pays an 8% dividend. I'm down 8% in a week. Okay. All right. It just kind of goes to show, man, that you can do due diligence and you can have information there that maybe you get lucky and discover. But in most cases, single stock really does subject you to the potential of a multi-year cyclical downturn. And this could be cyclical and it could be geopolitically driven. Okay. And right now we are going through a geopolitical downturn, in my opinion, in the energy sector. We are going through more of a domestically driven downturn as well, but I see global effects as well in the financial sector. Okay. So if you've been a financial sector investor and you've bought all the big banks, which I'm an advocate of, if you looked at these companies like myself have done, and like Matt have done, who I hold in the highest regard with regard to stock analysis. Okay. Gen X is another one who does a really, really good job at stock analysis. But these big banks, man, if you've looked at them, they look really, really good. And there should be no reason whatsoever to have Citigroup right here at $45 a share. Okay. There should be no reason why JP Morgan ever dips below $100 a share. Bank of America, some of these other large companies, asset managers, etc. But if you're part of the financial sector, you're getting clobbered right now. Okay. Who would have thought that interest rates would be going to zero and really would be prohibiting, or at least in the eyes of the market? Okay. These companies are still making money. But in the eyes of the market, a zero interest rate is an environment not very conducive to the banks outperforming over time. If you're a shareholder in these companies, you're going to suffer. And these are some of the things as a beginning investor. Again, if you're coming on and you think that you're going to be that anomaly, the one that's going to go out there and do this due diligence, it's going to be a wake-up call for you when you end up tripping and falling on one of these cyclical downturns that I think we're in right now. Matt would agree with me on this energy downturn, and financials have really underperformed for the last decade. You know, the thing that's really scary about that, and I'll just impart to you this on the single stock side of the house. There's folks in YouTube community, and I don't think YouTube videos have been coming through YouTube on the education piece and financial stewardship piece for much more than 5 years. Okay, I know Jeremy was one of the very first, Beat the Bush, etc. Some of those channels that have been pushing out awareness, etc. The one thing I will stress to each and every one of you guys is to understand this freaking fact, and you can take this to the freaking bank, no pun intended. The stock market has been in a 10-year bull market. Okay. We've had a few hiccups along the line, but nothing that can render a multi-year bear market. Okay. So for you folks out there that think you are going to single stock pick yourself to riches someday, the chance of you being humbled by that approach, not because you don't invest in good companies, but because your single stock portfolio is going to drastically underperform an underperforming passive market. Okay, let me repeat. If the market sells off and goes into a multi-year bear market, okay, it loses 10%, it loses 10%, and it loses 10% for the next 3 years. We'll make it very, very simple. And your single stock portfolio made up of 12, 19, 25, 50 stocks, whatever it is, in each of those next 3 years entering into, let's say, a bear market or a severe correction or a downturn, administration changes, whatever, it's in each of those years, if your portfolio ends up year over year at negative 14, negative 16, maybe one of the years you beat the market and you only lose 8%. you're still underperforming the market. And I think something that gets missed all the time when comparing single stock portfolio is not necessarily that alpha that you're able to get onto YouTube and brag about. Look at my portfolio. The market's up 14%. I'm up 20%. I'm awesome. You should follow me. Okay. It gets missed to the downside, to be honest with you. And that is the critical aspect of comparing single stock investing to the passive investing aspect. Whereas if the market does end up in a tailspin, what that does guarantee you is your dollars will match the market point for point on its way down. So yeah, you're going to be at that -10, -10, -10. In each of those categories, a new investor should be very, very motivated at the prospect of the carrot that I'm about to give you for passive investing, but also the ability not to look at it and second guess your program. Because it's those times of volatility that you're going to look at your portfolio and you're going to be like, wow, during a 10-year bull market, I had much more conviction about my program. I had much more confidence in my ability as a stock picker to beat the market than I do now, right? And if you're going to be fair about yourself and you're going to be fair about your own capability, make sure that you're satisfied with looking in the mirror and making sure that you're satisfied accepting the results that could be rendered if this 10-year bull market does end up breaking, okay? And the trend ends up breaking, okay? And I'm not considering the 2020 violent downturn. That was an inject to the market that nobody expected coming. But is the trend going to remain intact? It very well could be, okay? I'm not a market forecaster. What I always contend for investors to keep into consideration is to set themselves up to win in both an appreciating and a depreciating market. And what really gets to me sometimes is when people have not gone through severe downturn in the stock market. My severe downturn was back in 2009, 2010. And guys, to this day, it still affects my investing philosophy. It still affects my approach to the market. It really does. And I think a lot of people have not been jarred in that manner. And they've been kind of lulled to sleep in this environment that's been very, very conducive, for the most part, to tripping and falling into the Teslas of the world and the disruptive technology of the world and making money hand over fist, because it is an exciting time. The access to the market has never been so alluring, right? We've had a new wave of investors that come into the market, and there's a new flood of money just flooding into the market like no time in its past, right? But we do want to make sure that we're acknowledging and always revolving around this topic, comparing single stock investing, which is more of an active profile, as opposed to the passive investor. Now, a lot of the knocks that I hear on the passive investor side will come to me and say, Ryan, you're investing like an old man. I've been called everything under the book, guys. You do this long enough and you do understand that you take a lot of abuse and you live to fight another day, okay? But you invest like an old man. Investing passively is boring. You know, I don't want to just meet the market. I want to beat the market. Everybody wants to beat the market. Okay, in all seriousness, I'm with you. Those are not ill-founded desires. Yeah, they are. They are ill-founded. All right. Doing what it is that's been traditionally proven to be very, very difficult to do, except for a few anomalies out there, is setting yourself up for planned failure. It really is. Now, if down the line you've learned and evolved in understanding your tolerance to the market, you've learned and evolved in understanding what the stock market can dole out, understanding the performance of your portfolio. I'm a believer. And Matt Money as well, who's in the group tonight, is also going to become a believer. Because what's going to end up happening, and this is why I premised the 50-50 split in my evolution of really acknowledging the pros and cons of both programs, he's really going to understand the benefit of watching that passive program. And the real benefit that Matt has mentioned a few times, which is what I want to portray to the group, is that it takes zero effort. Zero. Now, what I mean by that is you can fund it, set it up for a DCA. Anybody can do that has surplus capital. Okay. You need a little bit of wherewithal on where to put those funds, and more specifically, in what percentages do you want to own those funds? Those are easy questions to answer, guys. Very, very simple. I'm not going to belinger a point on a live stream. But what I am going to say is once those products are dialed in the account of your choosing, you're going to be doing other things with your time, not actively monitoring that passive aspect of the portfolio. And what Matt mentioned a couple weeks ago as well, that really hit home with me, is that time doing other things while your money is working for you is the real key. That's the real takeaway. You can put an earmark on that passive aspect of the portfolio, and you can say, you know what, X number of dollars, it's relative, play with me, X number of dollars, I want you to match the market. Okay. I'm going to fund you over time. When you go down, I may consider putting more in the market. That's fine. But I'll pay attention to you every now and then. Okay. I'm going to throw you a dollar cost average program every month, every 2 weeks, whatever it is. But I'm going to do you the biggest favor that you can possibly get from me as your account holder. I'm going to ignore you and I'm going to leave you alone, because I have other things that is more important with my time. And that right there is the key. Okay. Now, when you're looking to compare these two programs, I do insist that a good dividend growth strategy is not to be understated. Okay. You look at the 5-year rate of returns and some of these gems in the market, it's impressive. Okay. But here's the thing, man. If you guys pay particular attention to my portfolio reviews, when I run those through, I don't blank out the red stuff. Okay. Royal Dutch Shell. Let's talk right now about some garbage in the portfolio. Royal Dutch Shell, nothing I could do to foresee that. I think Matt would probably give me a pass on that for sure. He's an energy guy, he knows the industry, but when you do diligence, it's just one of those examples of some of those companies that you can do research on, and you still get bit down over 53%. 53%. That's huge. Okay. Now, one thing that I do want to mention is if you are opting for that single stock program, okay, and you've failed to acknowledge that it only takes one bad apple out of a dozen stocks to really make a drag on that portfolio. Okay. So if you've got that one bad apple and it drags the portfolio down, you could have some real outperformers in that portfolio. But because you have that one bad apple, that could mean the difference between holding that VTI or total stock market index or ETF, right? That's going to give you that 10, 12% clip, maybe 8%, but that portfolio is going to only render 6%. Guys, you're underperforming at that particular juncture. And even at 12 stocks, 12, 15, whatever it is, the chances of you finding those 12 or 15 or 25 or 50 stocks that are going to all get you 8% or more year over year is actually very, very difficult to do. And examples like Royal Dutch, examples like ExxonMobil, and examples of Chevron, the three majors that I own in my portfolio. And you might say, well, that's where you went wrong, Ryan. You should have bought BP, Conoco, and Valero. Fair enough. Touche. You're not getting my point. My point is, if you were in energy over the last 3 years, you've been decimated. You've been decimated. It's been very, very difficult to make money. And you look at the balance sheets, you look at the cash flow generation of these companies, and the fact of the matter is we need oil. We need chemicals. We need everything that these facilities and everything that these companies are bringing to bear. It's just that they are completely out of favor. And what are you going to do? Are you going to talk dirty to your portfolio? Are you going to wish it to where you wanted it to be? It just doesn't work that way. And you can kind of put financials in that same category. So When I say that a portfolio of 10, 20, 30, 40 stocks is not diversified when compared to a total stock market ETF that holds 3,600 companies, I mean it. You're not. There are no professional schools of thought that will look at a stock portfolio unless you're already standing at the finish line like a Gen X dividend investor and you've got that capital to drop in those good gems of the stock market to generate a portfolio income for you. Unless you're in that position, there's not going to be any professional school of thought that's going to sit across from anybody and say, pursue this path. You'll end up where you want to be. It's planned failure. It's very, very difficult. And if in fact you do realize success out of following a program like that, you will have been an anomaly in that program. You will not have been the masses. Okay. So we want to make sure that we're providing a message that is conducive to the masses out there. And most people, in my findings, need to just get off of the sideline. All right. And that's why that initial 500 starting position, if you do nothing but buy one share of VOO, which if I'm going to reflect back on the 3 years of the history of the channel, I can't tell you how many people I talked to who were those sideline investors. And they're just like, man, I really need help. I understand. I don't want single stock, man. It just scares the hell out of me. I don't want it. What is the very best product out there, right? An ITOT, a VYM, a VTI, right? Any one of these. I know Fidelity, I know Jay's into DGRO. Any one of those good products that are out there and available in the marketplace will get it done from a passive perspective. If I look at those folks now and I just say, enter into these products, right? And just hold them for the rest of your life. Yep. Okay, Ryan. Very simple instruction. Got it. If we look at those portfolios now, it's astounding how good they've done. And the irony in the whole thing is if you chalk up those 365 days, 365 for the last 3 years, how much effort has been put into managing that passive portfolio? Very little, right? All that's been done is funding up year over year and living to fight another day, going on about your day, doing other things that are more conducive to your time. And I think that's really the beauty of it. So I've got a few minutes left here, man. I will absolutely kind of review. Hey, Ryan, thanks for your help paying credit cards off and investing now with Vanguard ETFs. And that seems to be quite a theme, honestly. And I try to strike at a couple different dividing lines in investing. Assessing your investing fitness. I know there's a few people out there that just want to jump into the stock market. It's not going anywhere. Got to get that debt under control. But once you do get that fitness correct and you do enter into the market, this deliberation that I just went through will be a deliberation that you go through for the rest of your life. Make no mistake, I didn't come out with this live stream to give you a definitive one way or the other because I'm at a 50-50 split. Sorry, I can't give you a definitive. I try to run a fairly good 50-50 split on my money in that I am trying to maximize the benefits of dividend growth investing within that pillar. And I'm trying to maximize the benefits within the passive investing pillar. And I don't mix the two. I don't rob Peter to pay Paul. I don't. I've just recently established a third pillar, which I've had for a while, that I've used as kind of a swing trading opportunity within my account, which I've been very successful at. But I've introduced the opportunity for some SPAC investing in there. And quite frankly, I'm kicking some ass. I can't complain. I'm very, very deliberate with my criticism, my observation of that opportunity. And my goodness. Okay. So, it's been an interesting self-education for me. Engaging on this. And again, thanks to Jason for the awareness piece on this, because I know how I research and I know where my discipline lies. And I wouldn't have had the awareness had it not been brought to my attention in the way that it was. But just kind of goes to show that there's a whole heck of a lot more ways to make money than just one way or the other. So just keep that in mind when you're approaching this investing philosophy and you're like, Ryan, you just spoke for a half hour and didn't say a word. What I'd like to say is There's a multitude of different opportunities out there. And the more awareness we can put on each one of those and understanding the pros and cons of passive investing, understanding what goes into single stock investing. It's not about coming onto YouTube and getting the whole buy Facebook and jump into Facebook and you will therefore be successful at investing. It does not freaking work that way. Sorry to be the bearer of bad news. What I will tell you is that there's a better way. There's a better way. Understanding the pros of cons, understanding the risk involved with those different strategies or any strategy for that matter, and ask yourself, does this make sense for me? Does this make sense for me? Not, hey, Ryan does this. It should make sense for me. No, does this make sense for me? That is the key. That's all we're ever trying to do. And everybody's application, as beautiful as this opportunity is, coming on, talking about wealth building, talk about wealth strategies, guys, we're all going to be the wiser 20 years from now. And we're going to look back on this opportunity and we'll probably have a good bit of laughing. We really will, because we're not setting ourselves up to just blah, 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 talk about wealth building week to week. That's exactly what I'm doing. And I would wish nothing less but the same for each and every one of you guys. It's just depending on how you seek out those different strategies and exposure protocol that's going to get you there. And that's the whole point of this deliberation, guys. Very, very cool. They scroll through. I got Rebecca Thompson in the group here. Becky, great to have you. A little shout out on the Independent Investor live stream. Hope all's well with you and the family. Thank you for popping in. I really appreciate it. This is what I'm talking about. Miss Harris tuning in from my bucket list. Number one, New Zealand. I've said that for years. She knows it. She's probably getting sick of it. But what a devout audience from my international community. And thank you to you, Terry. I really appreciate you making your way on as well. How much lower is Apple going to go? I had 91 as an entry. I got trigger happy. I did enter into all three of them, fairly lighter positions. I kind of had a feeling the sell-off was going to happen. I was right. Again, I don't put on a fake grill and a big freaking necklace and come onto YouTube and say, blah, 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 look at me, come follow me. I got it right. I get it right a lot of the time. I pay attention. And tech was due for a sell-off. This is a pretty violent tech sell-off here. Picked up about half of what I would have had post-merger in Apple. But I 91 is where I would look at it. I like it here in the low 30s better than I liked it at 38. But I find it funny and ironic how nobody's talking about buy Apple, whereas a month ago it was like everybody should just jump on board and ride Apple in their chariot of fire into retirement. Nah, man, been around the block a few times. That's not my thing. But the shares that I did enter into this week are long, and it's a company that I'm willing to take into a downturn if it does continue down, and I'll double up the position if it's 91. Just a good question. Thank you. All right, I do want to scroll here for the last couple minutes for sure. Ben says, preach. I don't know about that, man. I'm just trying to open up an awareness discussion, pros and cons of investing discussion. I appreciate that. That's cool. But oh my God, the poison ivy is thriving. That remind me of Oregon for sure. But for the last couple minutes, I will kind of close out the stream as well. I will invite you guys to the Passive Income Educator program that kicks off shortly after I conclude. I always try to conclude within 60 minutes. I will make my quick plug for the Independent Investor channel. I ran the live stream tonight. If you guys do see the icon with the mystery guest, that means that I'm opening up the forum. If you're uncomfortable with the live stream, come on prior to. You can talk to me directly, no problem. I'll help where I can. And I'm very, very capable of rendering that help. I got a few meetings this weekend as well. Just like every weekend, that's how this thing is going to roll. So thank you to those folks that have taken advantage of that opportunity. I know they're better for it, and we'll continue to roll that out. So at Ebo Boxing, it's hard to start a YouTube. I'm building my boxing channel because I love the topic. That's freaking awesome, man. Me and you got to get together. I've hit in the bag today for sure. That's been one of those skills that I took a little coaching on, and now I don't go to the gym without hitting the bag a little bit every single day. It's a daily discipline for me as well. And today I needed it. I really did. So if I missed anybody in closing, I just want to thank again my featured channels, all the administrators in the Facebook group. Thank you so much for making this community what I could have never envisioned it to be 3 years ago. We've got a lot of work to do. We'll continue to evolve the product going forward, revolving around an infinite topic. This topic is infinite, in that the wisdom that we need to achieve over the course of our life to succeed will never stop. And there will always be a need for somebody right around the corner that needs an awareness piece on financial stewardship and building wealth into their future, guys. So with that, I will sign off. We'll catch you next Friday, 9 o'clock Eastern Standard Time on the Independent Investor live stream. Thank you so much, guys. Be safe. Have a great, great weekend. We'll catch you in the next one. Cheers.